Yeah, no, I don't think so. I don't think so. Okay. Oh, there we go. Hey.
Got it.
Hey, Jeff, are you there?
I'm here.
Apparently there is a button that I don't have access to that we needed to push.
Oh, all right. Problem solved.
Okay. All right.
Doubling your
Looks
rate.
like there you go. Well, Kelly had to go in and push the button. So anyway, you are live. We're broadcasting all the way across the internet.
I love it.
And I hope everybody's doing well. Sorry for the delay in getting this running. We're trying it a bit of a different way, which is why the view looks a little bit different today, and which is why we're 10 minutes almost late starting. So everybody should be able to hear me. I hope you're doing well today. Thank you for coming. Let's go ahead and read a legal disclaimer since we're going. So, Jeff, are we going to be using my charts or your charts today?
We're definitely using my charts, but if you want to share any of yours, we can do that too.
Okay, no, I meant in terms of like the screens and stuff like that. So
Yeah, I'll share mine.
okay, perfect. Let me read this little legal disclaimer too. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liabilities for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Just a couple of notes. Thank you for coming. It does seem like the way that we're doing it today, there is a little bit of a bigger delay than we usually have when we're kind of live casting this. So if you guys have symbols or things that you want to look at, I'd get those in early. And I appreciate everybody's patience for sticking around while we kind of figured out what we're doing there. It is a bit of a new process for me. And so there you go. In terms of our guest today, Jeff Tompkins is joining us. Jeff is a good friend of mine. He runs a hedge fund. He also is part of Altos Trading, which is, I believe, the name of the hedge fund. The software that we've created with Jeff is called TradeTrend. You can find Altos Trading at altostrading.com. Is that right, Jeff?
That is correct.
So his stuff is really, really good. I really like doing these particular market recaps with Jeff because it generally seems that I get some pretty good ideas in terms of what to follow and what to look for in the market. So with that being said, let's go ahead and look at some charts, Jeff. I'm going to go ahead and make you the presenter.
Excellent.
Got my screen? Yeah, I can see your screen. I can see the market recap. And what are we going to talk about first?
Well, first, we're going to talk about how great our first names are, but that's probably a little biased. Anyway, our moms did well. Jeff is also a good friend of mine, and always a pleasure to be here and be able to participate in the market recap. And we actually just did one of these for our members last night. So I'll share a little bit about what we talked about with our members last night, and we'll take a look at some charts and do some fun stuff. So I'll give you a little bit of background on myself. Jeff did a nice introduction, and I especially love that you read the disclaimer because I won't read ours, and I definitely get tired of having to read that. So you covered it well there, and I appreciate that. But I do have 22 years of experience trading the stock options and futures markets. Received professional training at Morgan Stanley at their trade desk. And also the founder and chief investment strategist of Altos Trading. And as Jeff mentioned, I'm also a professor, and a lot of the strategies and market analysis that we share on these sessions are things that I use in my hedge fund. So it's a nice way for you guys to get kind of an inside look at the hedge fund world. And as Jeff also mentioned, I'm the founder and creator of the TradeTrend Signal Software, which we launched in cooperation with MetaStock. And they've done a really fantastic job at implementing that on their platform, and we'll take a look at that together today as well. All right, so I'm going to go ahead and hop on over to MetaStock, and we'll start out with our market analysis. So typically, we use the S&P as a gauge for the overall market sentiment and market trend. We are seeing some divergence between the NASDAQ and the S&P, which we'll talk a little bit about today on our session as well. They traded a bit divergently yesterday, but more in conjunction with each other today. And what we'll do to start out is map out our levels on the S&P to get a gauge for where there might be buying and selling pressure in the market moving forward. So we use both static and dynamic support and resistance to give us forward-looking information about where there might be those supply and demand points in the market. So it's a great way to give yourself some forward-looking information as far as where the market may find areas of support or resistance versus using a lagging indicator, and that can be beneficial when you're looking at implementing a strategy, even on individual equities. So we start with a top-down approach where we look at the S&P and other indices like the NASDAQ and the Russell 2000 to determine where those levels reside. And on the S&P, what we look at, aside from the obvious, or maybe not so obvious, price action levels on the chart, we purely look at the big round numbers, or what I call the century and half century marks, and even quarter century marks. So a century mark would be like a 4,200, a 4,100, and even a millennial mark is currently in play at 4,000. And then our half centuries would be at like 40.50, 41.50, and quarters at 41.25. And interestingly, when you map these horizontal static support and resistance levels out on your chart without even looking at the price action, you'll find that often we find areas of support and resistance or have price action around those levels. So if there's a retracement in the market or a correction, or a rebound, those typically happen off of these big round numbers. So like if I mark 41.25, we can see that we've got some support rejection here. And if we go down to 40.50, same thing. And we don't need to get these exact, they're more zones than they are exact levels, but typically we'll see some significant moves off of some of these areas. 4,200 was a big one to watch as of yesterday. So when we held our session last night with our members, we mapped out this 4,200 level, and this was previous resistance from back in April and May that was broken early this month, and we sustained a breakout above that 4,200 level for a couple of weeks. But something interesting happened today where the market sold off and actually broke through 4,200. So if you look at yesterday, and I'll zoom in a little bit for you here to make that easier to see. If you look at yesterday, the market found some significant support at 4,200. It sold off down into that level after gapping down on the open, and then reversed back up. And that was looking pretty bullish yesterday, but we told our members on our session last night to watch this 4,200, because if we break through it and close below it, that would be a bearish signal. And sure enough, that did happen today. We've broken this 4,200 century mark, which leaves way for lower levels of support. We did find support on the close today at right around 41.66. So if we look back at this candle on June 3rd, you see that we had a bullish reversal off of that level. So Monday will tell us whether that level will hold or if we'll continue a sell-off into lower support levels. And if that level does not hold, we'd be looking at the 41.25 level as our next area of support, followed by the 40.50 level as our lower level of horizontal support. So those are the significant ones to watch. And what we're seeing a lot right now with in the markets with these new highs as we reach them, the most recent one around 4250, which is another half century mark, is we often see these new highs reached, followed by a sell-off or a correction. So I tell our members to be cautious when we hit new highs in the market, especially in the absence of a real catalyst to push prices any further. And we've kind of gotten through earnings season, and there's not a whole lot really to push the market higher. So probably what's happening here, outside of a lot of eyes on the Fed and rate decisions, which we got this week as well, and the Fed has decided to keep rates unchanged, but did indicate that they're likely going to raise those by 2023, which is bearish for the market. So outside of that, this is probably some profit taking that we're seeing off these highs around 4250 on the S&P. And generally profit taking, in the absence of a catalyst to push prices even lower is only temporary. So in terms of catalysts that could derail the strong uptrend that we've been in, you kind of can put those into two baskets. One is more of a black swan or unforeseen event, kind of like we saw with the COVID-19 pandemic. And the other basket would be something that we know is coming up that we don't necessarily know what the reaction to that will be. And there's not a whole lot of that right now. So probably the most, the thing to be most cautious about right now is just some sort of a black swan. And those, of course, are difficult, if not impossible, to predict, but we can certainly, be prepared the best we can for those. And I think right now, outside of some major geopolitical event, what we want to be cautious about is the COVID-19 pandemic. Things seem to be improving right now with economies reopening and the vaccine, more people getting vaccinated and driving infection rates and transmission rates down, hospitalizations and deaths, and that's all great news. But there's still a lot of unknowns around that regarding variants and whether or not the vaccine will protect against emerging variants. So I could see that as being a sort of a black swan type of thing where down the road, a variant emerges and we find that the current vaccines are not providing adequate protection against those. And that could certainly be a catalyst for a big sell-off in the market. So just some things to be cautious about as we hit new all-time highs on the S&P. And in terms of making trading decisions in the market, I find that it's very effective and appropriate to monitor these major levels and use them to determine where the market may find support or resistance. In other words, where there may be supply and demand or buying and selling pressure in the market. So we certainly saw that over the past week in terms of selling pressure. And so now that we're rotating back down, probably mostly off of profit taking and some Fed decisions that have been made, we want to look for buying opportunities as it relates to support in the market. And you'll notice that on the chart here, we've got some symbols that are red and green diamonds followed by red and green arrows. And so that's the TradeTrend indicator algorithm that is built into MetaStock. And it's a momentum-based algorithm. So it gauges current market momentum strength and potential reversal points in the market. And it does it in a bit of a unique way in that it gives or provides a warning, and that is the diamond. So most indicators out there on today's retail charting and broker platforms, generally, if you're going to use them for a buy or sell signal, will give you the signal that you have to act on at that point in time. We've developed TradeTrend with MetaStock to behave a little bit differently and be more of a predictive warning. So when there's a higher likelihood of a move down in the market, the momentum algorithm will print a red diamond. And when there's a higher likelihood of a move up in the market, it will print a green diamond. And that's not where you would necessarily initiate a long or a short position, because the second component of TradeTrend is to wait for a confirmed follow through. And so that's why you'll see diamonds that are not followed by confirmation arrows. So this would be an example where the S&P had been in a strong uptrend for several weeks and had actually thrown out a nice buy signal on a retracement or correction in the S&P. And after this trend had sort of run its course, the momentum algorithm identified a stall in that momentum and trend, and you can see the S&P kind of move sideways. But the second component of the algorithm is to, if you were to take a signal or take a trade off a signal, to enter that on follow through below the low of the candle on a sell signal. So the entry, if you were to take a trade off this particular signal, would have been below the low of the candle, and then that's valid for up to three candles following that warning. So if the market doesn't actually trade down and hit the trigger price, it's no longer a valid signal. And that's what happened here. Although momentum certainly and the trend certainly stalled and the market moved sideways for a couple of weeks, there was no follow through on this signal. Now this was a signal that did result in follow through, and we actually got two sells and a buy that did not follow through. But then you'll notice here on May 11th, there was a sell with follow through. And you can see that with the arrow there that the market did hit the suggested entry price below the low of the candle. So that's kind of how the TradeTrend algorithm works in a nutshell. And what I want to point out with that is that it is flashing some sell signals up here at the recent all-time highs on the S&P. And so we actually got one on June 16th, and that was the sell warning with a suggested entry below the low of that candle. And I'll actually pull up the expert commentary because you can use that to go back on any of these signals to determine what the commentary stated. So if I click on the candle from June 16th, you'll see here in the commentary that TradeTrend had projected a move down, and the criteria for a sell setup had occurred. And then it also provides a suggested entry price if you were to take a short trade off of this signal. And this one did actually trigger the entry price on the next candle on June 17th. And you can see that here with the red arrow. And then we got the sell-off. So this can, the TradeTrend algorithm can help us determine the likely future trend direction, even off of a reversal, and help keep us on the right side of the market. And the nice thing about the MetaStock platform is you don't just have to rely on the symbols on the chart. It gives you full written instructions for each signal. And then not only that, as we fast forward here after the signal triggers, and you can see here that happened June 17th, where the suggested short entry trigger price was reached, initiating a sell short position. Then it begins to give us instructions to manage the trade if we had taken a trade off that signal. And it gives us a stop value for every candle. And by the way, this can be used on any time frame. We're looking at it today on a daily chart, but could be used on even intraday time frames. And so it's giving us the trailing stop level for each candle to help lock in profits, in this case on a profitable trade, where the algorithm is reading the market momentum and gauging that, and then giving us an instruction on how to manage it with a trailing stop after each candle finishes printing. So it's a really handy indicator to have in your toolbox to help you, again, stay on the right side of the market's momentum. So I'm going to go ahead and pause there, and then we can take a look at the NASDAQ, and I'd also like to take a look at the VIX, because something interesting happened there today too, the CBOE Volatility Index. But I'll pause there for a second just to make sure there aren't any questions that we want to address before we move on.
No, I don't have a lot of questions coming in just now, but if I could sum up, what I think it sounds like you're still cautiously optimistic that we are in an uptrend from a broad market perspective. Would that be a correct way to characterize it?
Yeah, absolutely. And yeah, until we have some sort of a catalyst, or certainly the price action to say that we're in more of a correction or bear market, the uptrend is still intact, certainly. And for those of you who aren't aware, a correction is defined as a peak to trough, so the most recent high to the most recent low of 10% or greater would qualify as a market correction. So we're not in that that neighborhood yet. And then a 20% peak to trough sell off or greater would qualify as bear market conditions. So we're still nowhere near either of those at this point. And I think in the absence of a significant catalyst, we'll likely see prices, maintaining current levels. Again, I think a lot of this right now is profit taking from all-time highs, which is common to see. And I think that unless something drastically changes, we'll see either a continuation of the uptrend, or often what we'll see, if there's really no catalyst pushing prices lower or higher, that's where we tend to go into more of a sideways range, which may be more likely. And we often will see that in the summer months as people take vacations, or the market volume thins out a little bit in the summer. And again, without that real strong catalyst, often we just see more of a ranging type of price action, or the market moving kind of in a sideways channel.
There's a whole saying around something in May. I can't remember it, but
right, yeah, sell in
the
May.
NASDAQ.
Sell in May and go away is the old adage. So yeah, which I've never liked, because yeah, I guess if you're a buy and hold investor, that makes sense, but certainly not one to follow if you're an active trader. So yeah, so let's take a look at the NASDAQ. So this is where the NASDAQ is differing a bit from the S&P. We had a really bullish up move yesterday, and if we map out our support and resistance, this is a half-century market, 1450, previous all-time highs. We broke through that. We're kind of playing around with that level right now. And again, bullish move yesterday, followed by more indecision today. So if we zoom in here, we can see that the high and low of today's trading resides within the high and low of yesterday's range. And that signifies more indecision, but it was a bearish indecision. So the bears had control today, but from a broader perspective, it was really not that significant. They weren't able to push prices below the open from yesterday. So if we look at the support and resistance again, we'll have to wait and see next week where this takes us. But 13,700 is an important one to watch. If you look at the support here from back in April, and which was broken in May and then turned into resistance in late May, early June, as we can see right here. And then that was broken through in the earlier to mid part of June. And now we're playing around with this 14,050 level, which is one we really want to watch. And we kind of closed just right, almost right at that 14,049.58. So again, that's probably, looking at just these big round numbers, why we closed right around there today, simply because that's a level that the big institutional players are watching closely, and it's also previous resistance from back here in April. So next week will be a good indicator of whether we continue the move up beyond the previous all-time highs from April, or whether we rotate lower into these levels of support in the 13,000 range. So so that 13,700 would be an important one to watch. The 13,300 is an important one to watch. That was a resistance area from back in March, you can see here. And currently no open trade trend signals on the NASDAQ. There was a buy here before, kind of in the middle of this uptrend. There's actually a couple buys from June 8th, and then we got another one on June 11th. And those have both been exited at this point. So currently flat as far as trade trend signals on the NASDAQ. But this would be a good level to watch for buy and sell signals from trade trend. And those tend to be the signals I really like to consider, are the ones off of support and resistance levels, or the ones that are going to take us through a breakout from one of those levels, like this buy signal from back on March 31st, where we got the breakout from this previous supply point in March and a move up. And then we had a kind of a double top here, a nice sell signal on April 29th, and then a move down, then a nice buy signal again here on May 17th before the market moved up. And you can see it moved up right into resistance here, which was previous support from April, and was exited here on May 27th. So pretty interesting too, being that this is a momentum algorithm that can't identify these levels that we've mapped out, and is exiting these signals when we're approaching these levels, and also entering when we're near these levels. So that tells us that the algorithm is doing its job and giving timely, accurate buy and sell signals as market momentum shifts or slows down. So any questions on the NASDAQ?
Oh, let's see. Oh, okay, I am live. I was like, how do I find my my microphone button? No questions on the NASDAQ. We do have somebody that wants to look at the NSEI, but which would be the Nifty 50 for India. I think
Right.
it makes sense before we jump over there to look at the VIX, though.
Yeah. Well, we'll take a look at the VIX and then we'll go over the Nifty. So, all right. So the VIX is an important one to watch. It gives us a lot of good forward-looking information. So for those of you who don't use the VIX, it's the CBOE Volatility Index, and it measures the front month option volatility on the S&P options. So it's inversely correlated with movement in the S&P index, the SPX. So in other words, when the SPX goes up, goes down, the VIX goes up. And conversely, when the when the S&P goes up, the VIX goes down. And so generally, a rising VIX indicates selling pressure, and a falling VIX signifies buying pressure. And in terms of interpreting the levels, the line in the sand really for whether we're in a volatile market or more of a calm, steady uptrend is 20. So is kind of the benchmark that people use. When the VIX is over 20, we're entering volatile territory. There's generally perceived to be more risk in the market. And when the VIX is below 20, it's perceived to be a less risk. And it's often referred to as the fear gauge for that reason. So there tends to be more fear and panic selling in the market when the VIX rises, and less when it's hovering below 20. So we've been below 20. Well, actually, going back to the Corona crash last year in February and March, the VIX is really not traded below 20 much since then. It's mainly resided above that 20 level until this year, when we finally kind of, as you can see, began hovering below 20 for longer periods of time. We did have a spike in May. There was a correction in May that caused the VIX to spike up to about the 28 to 30 level. And that's a pretty common spike in the VIX. We mark that 28 level. Generally, when we get these spikes, they last, for a couple days or so, and then they fall back down. Now, you can't trade the VIX directly like you can a stock, but you can trade options on the VIX. And so it's a great way to insure your portfolio when insurance is cheap. So for all you options traders out there, you'll know that when volatility is low, options premiums are low and are less expensive. So it's just kind of like car insurance or home insurance or any other insurance you would buy. You want to buy it when it's on the cheap. And the nice thing about the VIX is you can do that and actually have the potential of making a profit on call options when the VIX spikes. And it's kind of, it's not to get too in depth with things like implied volatility, but when the VIX spikes, implied volatility goes up, and that causes option premiums to go up. So the returns can be pretty attractive on buying calls on the VIX when the premium's low. And you can see that the TradeTrend signals can also be used on the VIX. We got some nice buy warnings on the VIX, most recently on June 15th, that this particular one triggered the very next trading day on June 16th. That can be played when the VIX is low or below 20. And it can be used as insurance to protect against a downside move in the market by purchasing calls. But what happened today that's interesting is we've been below 20 now for about a month or so, and almost a month. And today we spiked and closed above 20. So this is a warning sign that there's more fear entering the market, and we might see increased volatility in the coming weeks. And when I play these, I like to look for these spikes again up into like the 28 to 30 level. Going back again to the Corona crash early last year, we saw a really extreme VIX spike up into like around 90 or so. That's very unusual to see the VIX spike up that high, but you can see the advantage of having the insurance when the VIX is low, just in case something like that unforeseen or a black swan event happens, as it inevitably does. So that's why I wanted to take a look at the VIX today and point that out is that, we did close above 20 today, indicating that we might see some more volatile market conditions ahead.
I have a question around the actual mechanics of the option, if that's okay.
Sure.
Typically, when you're looking at a VIX option, are you what type of an expiration would you generally look for, and why? Like, would you be looking 2 or 3 weeks out, the next month? About what kind of a time frame are you looking at?
Yeah, that's a really great question. In fact, that came up several times on our session last night. So typically, as an option buyer, you have time working against you, so you've got to be right on the timing. Since this, I typically look at the VIX as more of an insurance product versus a short-term speculation, and the fact that options tend to decay more rapidly within 30 days of their expiration date. Prefer to go at 30 days or more out, and even maybe 60 to 90 days. And the trade-off there is that you pay more for the insurance the further out in expiration you go, but you're also sort of combating that time decay that you inevitably experience as an option buyer. So it really kind of depends on, it's a complex question and probably beyond the scope of our session today, but it depends on, the level of the VIX. Maybe more apt to choose a shorter term expiration when the VIX goes above 20, because that might indicate that we're getting a near term spike. When the VIX is very low, like it was down here on this trade trend buy signal, we don't necessarily know how long the VIX is going to hover. It's found support, right around 1550, is going to hover around that level. So, it may make more sense to go a little bit further out, like 2 to 3 months. In this case, and in either case, the call options will profit on a VIX spike. You'll just be reducing some of that time decay risk with shorter dated options.
All right, cool. And one more question that's not complicated at all. In the money or out of the money, is there a particular delta that you're looking for?
Yeah. And that
Not complex, right? Not complicated at all,
we
right?
talked about that in quite depth last night on our session, and yeah, it depends again on your outlook for the VIX spike. So generally, I favor going in the money as an option buyer because you've got more extrinsic value built in, or intrinsic value built into the option premium, and you have a higher probability of profit by expiration the further in the money you go. And also, if there is no follow through on the move on an in the money option, you could likely salvage premium out of that trade and not lose 100% of the premium like you would if you bought an out of the money option and the VIX just stayed flat or moved down. So you've got more wiggle room there on the in the money strikes, and so there's an advantage there. And of course, the trade-off is that you pay more money for the premium on those in the money options. But there's a reason for that, because you have a higher probability of walking away with either a profit or not losing as much. And one of the biggest overlooked things in regard to that by people, I think, is that they think that because the premium is higher and the insurance costs more, that they have to pay more money for it. But that can be adjusted with your position size, with your number of contracts. And on our session last night, we demonstrated that how you could spend the exact same amount of money buying an in the money call on the VIX as you would buying an out of the money call, just by adjusting the number of contracts. So we showed that if you bought like a out of the money 20 delta call and you bought 10 contracts, it would cost you about the same as buying one contract of a deep in the money call. And on an actual follow through of of an uptrend in the VIX or a spike in the VIX, the out of the money call, yes, would make a higher percentage return, but on a dollar cost basis, you're generally better off, buying in the money, because it, improves your probability of walking away with a profit, or at least not losing 100% of your premium. So that'll really, again, we could spend a whole session on that alone, but is partly dependent on, your outlook and the amount of time you think it will take for the VIX to make a move. Because with option buying, you generally have to be very precise with timing and direction and get that right to overcome the time decay that you battle as an option buyer.
If somebody wants to kind of join the room and the kind of the chats that you're talking about, what would be where should we point them?
Yeah, so the best way to kind of join our group is to just to go to our website. So it's altostrading.com. I'll just throw it up here on the screen. And you can just go ahead and put your email address in there, and we'll actually give you a free copy of our options trading book, How to Fix Losing Options Trade. So it's an ebook that you get by joining our club. And if you do that, we invite you to all of our live sessions, which we hold typically 2 to 3 times a month. And you can join those. They're free to join. And we do market overviews and strategy sessions, kind of like we're doing together today. So that'd be the best way. Just altostrading.com will get you in there. So.
All right, cool. Digital Vibes. I'm sure that's his first and last name. Wants to know if you could look at the Nifty 50 index.
Yeah. Let's go ahead and take a look at that. I'm actually not sure what the ticker on that is.
.NSEI. I didn't know either. I had to ask our support desk.
All right. We actually have a lot of members in India that trade the Nifty, but since we don't focus on it so much here in the US, we don't look at it very often. But and some of the symbology, of course, is a little bit different on MetaStock. So thanks for letting me know that. So yeah, it looks like we're kind of seeing the similar type of setup on the Nifty. In terms of trade trend signals, we had a sell signal pop in on June 16th. Looks like the previous high was just the day before, as the Nifty is rotating lower. If we look at levels of support, the Nifty tested a major support level around 15,450, it looks like. And you can see that was a high from back in February. The Nifty sold off into that level today, and then rejected it and moved back up. So this, when you see this kind of price action, when you see a big range expansion is what I call it, excuse me, where, previously you'd had some fairly small ranges from high to low, and then you get a much wider range from high to low. That's a range expansion, and you'll often see those in around these levels. But what's interesting with this one is that there was a big wick on this candle, and the Nifty was able to push back up off that level again, which was a previous high. So this is a strong level of support. If it breaks, it could signify a significant move down. If it holds, it could tell us that the Nifty will resume its uptrend, which it's been in really since back in mid-April. Prior to that, February, March, April, it was more in a sideways range. We kind of have a wedge pattern here. If you draw the, oops. So you can see this wedge pattern, and it broke out of that. So that's just a bullish wedge there. So probably, medium to longer term, looking bullish. Short term, we really want to watch this support level and see how price reacts around it. But as far as momentum, the TradeTrend algorithm did throw out a sell on June 16th, which is moving in that anticipated direction over the last 2 trading days since that sell warning was printed on the chart. So yeah, that's kind of my quick and dirty analysis of the Nifty. Haven't looked at that one in a long time.
Yeah, me neither. Me neither. But I think okay. I think you're spot on right there. In any case, just kind of getting back to the U.S. markets a little bit. Is there any particular areas or stocks or things like that that you're interested in right now?
Yeah. So the tech sector seems to be hot. As we looked at on the Nasdaq, I can share this. One of the things that I like to monitor, and it's entirely free. It's a great resource. Is finviz.com, and we have no affiliation with them or anything of that nature, but it's a great resource that is available via the web. They do have some paid subscriptions and things, but I've never tried one of them. Don't find that it's really necessary because they do have so many great free resources. But one of those is found under the groups tab on their site, finviz.com. And if you don't have a paid subscription, you'll see that you do get pop-up ads from time to time. But the cool thing about this is you can break the markets down by sector, industry. You can look at different countries. I think with the free one, you can only look at U.S. listed stocks, and probably some of their paid subscriptions you can go into other markets. But it gives a really nice visualization of the performance of the sector relative to the S&P, and it breaks it down over time periods, starting with a day. So obviously, when we have a down day in the market, you're going to see a lot of red. But I like to generally monitor like the 1 month, 3 month, and 6 month performance. And you'll notice that in the 1 month, technology is the top performing sector. It's outpacing the S&P by over 6%. And then over the last 3 months, outpacing by over 8%. It does drop down when we go back further in time, 6 months, but still doing very well. And so that's kind of what I look for. And then if we go back a year, doing very, very well, over almost 44%, outperforming in terms of relative performance. So this is a nice way to get a quick view of what the top performing sectors are. So right now, tech is hot, real estate's doing well. You can see on the 1 month, it's number 3, number 1 on the 3 month, number 4 on the 6 month. So I generally look for sectors that are in the top 3 across multiple time periods. Energy is doing well, longer term. If we look at 6 months, outperforming over 24%. So those are, to answer the question, some of the top sectors that I'm kind of watching right now. And that could be a great way to help, narrow down your search, because MetaStock has a great tool to scan for opportunities with indicators like TradeTrend, and you can actually break these scans down and even develop your own. Like you can see here, I've developed some of my own custom scans, Jeff's futures list, Jeff's weekly options list, and use those. So if you find, that, for instance, the tech sector is doing well at the time, you can develop your own custom watch list of tech stocks and then run a scan to look for buy and sell signals using indicators like TradeTrend within those. So that can give you a nice extra edge to hone in your selection process when you're looking for trading opportunities.
Jeff, would you say that you trade futures, options, or stock most?
Well, it sort of fluctuates. So, and it depends, whether it's my personal account or my hedge fund. We don't do any futures trading in the hedge fund. That's purely equities and options trading. I've done a lot of futures trading over the past couple years. And with volatility in the market and stuff, it's been some nice opportunities. Always, doing options. Options are definitely a core market of mine, and have a lot of option strategies that I incorporate into my trading, as well as in the Altos Capital hedge fund. And so it kind of varies, but probably lowest would be equities. I don't do a whole lot of stock buying, individual stock buying. Most of it's weighted in futures or options.
Cool. Can we look at one more chart?
Absolutely.
We have a request for Fubo, Fubo, F-U-B-O.
F-U-B-O. All right.
And I think that's .o.
Yeah.
Nope. It might just be. Go ahead and hit cancel. Sorry about that. Just type in FUBO and it'll tell you which extension it is from here. Let's see. FUBO. Try .k, I guess. There we go.
Yes. Fubo TV. I actually almost signed up with these guys a while back. They keep raising my satellite bill on me, and been looking for alternatives, but never tried it out. But yeah, so let's take a look at this.
The service itself comes on high recommendation. I haven't tried it, but I have a friend that says she absolutely loves Fubo. Not as just a stock, but as a service.
As a service, okay. Good to know. So yeah, it's obviously a very volatile stock. Made a big move up off lows around $10, and late last year spiked up, almost to 65. Had a big sell-off. Could have been earnings, hard to say. We'll dig into that deeper, but definitely volatile, making moves, 10, 15, 20 point moves in just matter of a few weeks. And kind of looks to me like it looks like a young company, looking at their chart, right? You don't have a lot of the steady price movement. It's probably a lot of earnings guidance and things like that moving the price. But just on the technicals, we can look at this trend line that was broken in May. So wouldn't probably have wanted to take any buy signals while this was in this downtrend. But there was a trade trend buy signal on a breakout. I'll zoom in on this here so we can see it better, of this trend line. So this would have been a nice one to take a look at. And since then, the stock's obviously been going up. That signal came in around $19 a share, and looks like on the close today we're at $29.26. So nice move on that one, and it looks as though this stock is trying to push higher off of this break of the downtrend, or this trend line. If we look at horizontal support and resistance, this would be one that is going to take some catalyst to break through right around the high here, which was 31, let's just call it 31.50. We can see that we had some rejection here, broke through, became support in January, broke through that again. So this this 3150 level appears to be a strong horizontal level of resistance that if the price can break through that, could see the stock moving, higher back up into previous highs. But it's definitely having a hard time pushing through that 55 to 60 level. And then in terms of lower levels of support, there's a fairly strong one here around 26. You can see. And these support and resistance levels, once a support level, once a resistance level is broken, it tends to become support, and vice versa. Once a support level is broken, it tends to become resistance. You see that happening frequently with this stock. So now that this 26 level is broken, that's now a level of support. So right at the current moment, the stock is really in a tight range over the past couple of weeks. It's not, it's kind of moving sideways. So this would be maybe, in my opinion, more of a breakout type of thing, whether it breaks to the upside or to the downside through these two levels.
Cool. Vincenzo wants to know if, okay, and this will be the last, I think, chart we'll have time for today. If you'll take a look at Amazon.
Yeah, sure.
AMZN. And while you're doing that, there's a couple questions I think are pretty interesting too. SBND in YouTube wants to know, well, everybody's in YouTube, how I can get a hold of you or your team.
Okay, yeah, so again, you can, well, let me, I'll give our contact info after we look at the chart, and then let you know how you can do that. So Amazon, is been a ranging stock for a while, but it's a wide range. So the top of the range is around 35.50. And notice again, what I pointed out at the start of our session with these big round numbers. Notice that we're century marks and half century marks here, 39.50 on the high of the range and 2,900 on the low of the range. So you can see that 2,900 is support. So this would be more of a ranging play, in my opinion, where if you wanted to trade Amazon, shorts around 35.50 and longs or buying opportunities around the 2,900 level. So right now it's, with Amazon being close to the top of this range, it may not have the legs to move much higher. But it is a wide range again, 2,900 to 35.50. So you're looking at over a 600 point range. So this, and I know just from talking to our members, this is a widely traded stock, obviously, but it's our members, or I know from talking to them that they are playing this range pretty frequently. So sometimes these ranging stocks can be really nice opportunities. But right now, it's looking as though Amazon's stalling out near the top of the range and maybe getting ready to move back down into the bottom.
Good. Digital Vibes has a question: which is better, moving the stop beyond your entry price as soon as you can, or adding to the position if the price moves this favorably? That doesn't sound like an either or though to me.
Yeah,
like you could do both, right?
Right. Yeah, it's not necessarily an either or, and it's very individual. So those are always kind of difficult questions to answer because it largely depends on where did you get into the stock, how much profit.
Where's support?
Right. Yep. All of those things, and so it's very individual, and that's kind of one of those almost kind of crosses the line of personal investment advice, because every situation is a bit different and that type of thing. So it's a bit hard to answer, but either one, either or could be the right decision or the wrong decision depending on individual circumstances.
Yeah, I only like to move my stop when my rules tell me to move my stop. It doesn't. Yeah. It doesn't depend on how soon it should be. So.
Okay. Yeah, exactly. So Cool. Well, yeah, I appreciate everybody sharing those opportunities. Let me actually get over to our contact information. So, actually, let me just get out of this because it's okay. So if you want to contact us or have any questions or about our products and services, we do offer TradeTrend on MetaStock, which after I share this, maybe Jeff could let you know how you can get access to that. And then we also offer alert services around options, different options in stock strategies, as well as coaching and online courses and things of that nature. But we're a big education company. We really believe in educating retail traders and giving them the tools and strategies that they need to be successful. So if you have any questions on those, of course, we're kind of approaching the end of the day on Friday and moving into the weekend. So if you reach out, we'll get back to you on Monday. So you can email us support@altostrading.com, or we have contact forms on our main website, altostrading.com, or tradetrend.com as well, if you're interested in the indicator. And we do offer trials and things like that on MetaStock. So Jeff, do you want to let them know a little bit about that?
Sure. Yeah, if you want to get in touch with us, you can reach us at metastock.com /sales chat would be probably the best way. Or you can just look us up at metastock.com as well. So that's probably the easiest way. It's just metastock.com /sales chat. We're happy to answer any questions you have. Paul wants to know if you can get TradeTrend for MetaStock and Thinkorswim at the same time. And I believe we do that all the time, if I'm not mistaken.
Well, so it kind of depends on the package. So they would be separate licenses. So if you were to say purchase it on MetaStock, and then you wanted it on TradeTrend, we'd have to issue a different license for that. So they would be separate. But from time to time, we run promotions and packages where we do bundle some of the platforms in together. So I would suggest probably the best thing to do is just reach out to our sales team. And again, you can do that by emailing support@altostrading.com, and we can get in touch with you to discuss that.
All right. Last question, Jeff. Do you have any plans for this Father's Day weekend? Oh. What's the funnest thing you're going to do?
Well, I guess that's up to my family. I'll have to see what they have in store for me, right? So we'll see. To be determined. I'll have to report back on that. But yeah, hopefully some relaxation and much needed rest, and certainly hope all the fathers out there have the same. And what about you? What do you have planned?
Well, on my way home, I'm going to get a gift from my dad, and then we'll be hanging out with him next or tomorrow on Saturday. So other than that, I kind of am a homebody. I'll probably not do much more than that. So
yeah, we're relaxing here at home, and probably take my dad out to dinner on one of these nights. So anyway, right. Happy Father's Day to everybody out there. Almost forgot it was Father's Day this Sunday.
Yeah. I just hopefully that was a remembrance to do something nice for your dad. And if you're watching in the audience today, it's Father's Day Sunday, so you've
probably a lot of people freaking out now.
Yeah, exactly. Jeff, thank you so much for spending some time with us. I appreciate it. Everybody else that came in and asked questions and listened, thank you. We appreciate the feedback and the participation. If you're on our YouTube channel, make sure to subscribe to the channel. I really appreciate that. It helps a lot. And I understand that there's karma that you can get for doing that. So in any case, have a great weekend, Jeff. Have a great weekend, everybody. And we will see you hopefully in the near future.
Same to you. Thanks, everybody. Have a great weekend.
Thanks, Jeff.